FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz, and today is 2/14/20. Halfway through the month. It's been an unbelievable month in so many ways. We saw market correction and then uncorrection, and then I don't know where we are. Where do you think we are? We'd love to hear from you. KL@kerrylutz.com is the email address for your opinion, or just post your views up on YouTube. We'll answer them there as well. Our good friend from InTheMoneyStocks.com, Nick Santiago, is with us. And Nick, just like you predicted on the spiders, when they went over 100 million on the down day, we then saw a correction, but it didn't last for very long, did it?
No, it didn't last very long, but that is probably the first shot across the bow that you want to be careful now going forward. So if you look at a chart of the spiders, like I said, when we get to that high volume move, that's probably going to be where we start to correct. And unfortunately, it was only for about 9 or 10 days, and then the markets ripped back up to new highs. The high volume on the 31st was 113.8 million shares. Spiders tested their 50-day moving average in that session. The cash S&P missed it by a few pennies, and then the markets ripped back up. But I think traders right now got to be a little bit cautious. I actually took a probing short position in the S&P 500 I'm currently in now. So I think this is a time to be cautious. I know we're getting a lot of central bank intervention, especially in China. China's market has really soared and roared. Even though there's no financial activity going on there due to the coronavirus. But if you take a look at the low pivot that was made around the start of February, I mean, that market has ripped up by basically a couple hundred points to 2,900 right now, and it was down around 2,700. So it's been a big rip, and that's all central bank injection and fusion of capital. Money printing, if you will call it that. And
how long can they keep the good times rolling along here?
Well, they've been keeping it going for quite a while. So, you have to look at it and say, I'm not really so sure about how long they can keep it going. But I will say this, the coronavirus is actually echoing a 17-year cycle. I like to call it the cicada cycle. And it mimics the bug that comes out of the ground every 17 years and wreaks havoc on all the plants and trees. And basically, it's somewhat like a locust, and it'll just eat everything and then dies off in about 6 to 8 weeks. But that happens every 17 years. And if you go back from where we are now, 17 years ago, you had the SARS epidemic, and that SARS epidemic lasted about 14 months. So we don't know the extent of how bad this coronavirus will be or how much it will travel, but we do know that the numbers in China regarding coronavirus, people that have been affected by coronavirus are fudged. So that's coming to light now. But as far as the market goes, we'll just have to wait and watch the pattern. Right now, if you take a look at the Chinese Shanghai Index, it's really just been a parabolic move straight up, even though the country is basically on lockdown.
Yeah, isn't it remarkable? And this is truly the black swan, isn't it?
It is. And it just goes to show you the power of central bank monetary policy. I mean, it's rather incredible. But to see a market just skyrocket, meanwhile, there's no economic activity going on, is quite something.
Yeah, isn't it remarkable? And if you told me this 6 months ago, wow, who would believe it? But, until the election's over, they're going to keep priming the pump, aren't they?
I do think they will, but you do have a lot of what I like to say non-confirmations going on in the market right now, and that's why I took a probing short in the S&P 500, simply because you have stocks like J.P. Morgan. They're not making new highs. In fact, J.P. Morgan today is negative. It's only down about 3 cents, but it's had about $1.50 reversal today. So, that stock is not making a new high. Semiconductors are just starting to catch up. Transport's another industry group that, they're way off the highs. They're not even close to new highs. So that when you have a lot of non-confirmations between very important industry groups, that's always a time to be a little bit on the cautious side. Now, we know that the Federal Reserve is keeping the repo market in check with all that liquidity. I mean, they're probably, I think they're at, $500 billion worth of liquidity has been thrown at the repo market, and they're probably going to keep that going. So, at this stage of the game, it's very, very hard to fight central banks. But when I see this many non-confirmations going on between industry groups and the major indexes, it always raises a red flag for me. And, like I said, I just took a probing short. First time I've been short in a long time. So we'll see how it plays out. Right.
And we saw a nice little movement upward in gold, not confirmed by silver, obviously. What is that telling you?
Well, in my opinion, gold is still in that long consolidation phase. So if you take a look at, say, a daily chart of gold futures, you'll see that really since the start of the year, we've just gone sideways. And the longer that continues, the higher gold goes ultimately. So I honestly own a lot of gold bullion. I own silver bullion. I don't even want to see it break out right now. I'd love to just see that thing base for a whole year, and then you watch the explosive move to follow as we get into 2022, 2023, 24, and so forth. So right now, when I look at gold, technically nothing wrong. It's in an uptrend, and it's in a consolidation pattern, which ultimately predicts higher prices.
Mm-hmm. And yeah, because we didn't see silver confirm either, right?
No, silver did not confirm, and silver is going to be the play down the road, believe it or not, because when that plays catch up like it did back in 2011, a lot of people don't realize silver went all the way to $50 an ounce. So right now, silver's sitting at around $17.50. It's actually making the same exact pattern. If you take a look at a monthly chart of silver futures, you'll see that it's just consolidating the same exact way. And the next time it blasts off, it will prop up itself up into the low 20s, and then so forth. You'll start to see that go a lot higher. But again, these are patterns that take a lot of time to mature. And once they do, it's almost like you're putting a teapot on the stove. And you know how you light the flame there. The water doesn't boil right away, but eventually it starts to really bubble up, and then that whistle blows. And again, you'll see the same kind of effect happen in silver and in gold. Both are setting up the same way.
Right. Okay. Hey, oil is down. Looks like it's right around $50 the barrel. You've been bearish on it for quite a while.
Yeah, I said to you on your show, I said 65 would be the top in oil. And if you take a look at a chart and you just go back to the 8th of January, the high was $65.65, and that marked the high. Now I think oil is going down to the mid-40s. In due time, today it's bouncing a bit. You got a little bit of a relief rally here in the markets, and I think that's helping oil out. But I ultimately see oil going lower now, probably at least to the mid-40s, if not a little lower.
Okay, so let's talk about Tesla, because you were thinking that the high would be somewhere around 650, if I remember correctly, when we last talked.
So
and it went to 950.
I had a few highs for Tesla. Believe it or not, every high that I picked out of Tesla worked, and then the stock just proceeded to go higher shortly afterwards. If you look at Tesla, it got just underneath the $1,000 marker. Got to as high, I believe, as $969, and now it's put in probably a top for a while. So Tesla is still, you have to respect the uptrend that it's in. It went parabolic. Sometimes when you get these momentum type moves, they get these blow off tops. But the stock isn't just going to die on the vine here. I mean, there's still huge support in the equity right now around 620. If it gets down there, that's where the institutions will probably step in and defend the equity. And then if that were to break, obviously you're going to look at the $500 whole round number. That would be the next big institutional number from what I could see. But it's a very tough stock to trade because it has so much momentum. But you could see that, when that thing finally came down. It came down pretty sharply, and right now it's just we got to watch for pattern. It's going to take a while before anything conclusive comes from Tesla at the moment.
And let's not forget that all the shorts got blown out on the way up.
Absolutely.
So there's no selling into it now, into weakness, because they're gone.
That's right. And in fact, when the stock was up around $800-900, there was no fee to even borrow shares. You could borrow all the shares you wanted, and that was kind of a tell that thing was getting a little bit overcooked. But to its credit, I mean, it was a tremendous move. I mean, I can't remember a stock doing what this stock has done. Basically, in June of 2019, it was trading as low as $177 and almost went to $1,000. So it was quite a run. But those parabolic chart patterns, they often indicate market tops. And just to add something to that, anytime you have stocks that are mainstream names like this that make these patterns, that's also a time to be worried about the market. So, I don't know if your listeners know much about my work, but the 0 year of a decade is often not a bullish year. Doesn't mean it's going to be a negative year, but it's just not going to be like the 9 year of a decade, which is always a bullish year.
Yeah. Yeah. Well, and we also have the January effect, and stocks were not really up in January, right? They kind of headed down towards the end of the month.
Yeah, so I mean, we had a peak put in the market right around the Martin Luther King holiday. That's when I alerted my subscribers to be a little bit on the cautious side. I said most turning points in the last 10 years or so have occurred in January, right around that Martin Luther King holiday. And you could see the same exact thing happen last year as well. Even if you go back to 2007, 2008, you see the same turning point there. So beginning first half of the month of January, generally very, very bullish. As you get into the latter half, if you're up into that, then it can be somewhat bearish. And we did have that, nice pullback, but that's really all it was so far.
Yeah, so you had a dream, huh, that the market was heading down.
Well, I have to say, it's if you go back and look at charts, which is what I do, you'll see that turning point right around that holiday has been quite incredible how it just seems to repeat.
Yeah, that's so fascinating. And then we're looking at dollar. You were bullish on it. Interest rates, you were bullish on them as far as going lower. Treasury debt going higher. All of that came to pass.
Yes. So let's talk about the dollar quickly, because like I told you, I got long the dollar, and I'm still long the dollar. Well, I'm basically short the euro versus the dollar. So I took that trade right in the beginning of the new year, and on January 2nd, and you could see if you look at a chart of the euro, that's just absolutely breaking down right now. And a lot of people are thinking that's a good thing. That's really a negative. It just goes to tell you that money is fleeing Europe, and it's going to continue to flee. The dollar, the euro versus the dollar right now is at 108.77. And if you take a look at when it peaked out, it was above 112. So, I don't know if people realize or know Forex very well, but that's a tremendous decline that has taken place, and it's still going lower. So, I'm up nicely on my long dollar, short euro play, and we've made some really, really good money here on that. And we're actually I'm looking for the euro to even continue down from where we are now.
It's still headed down. Well, and if we look at the news, it would more or less kind of confirm what you're saying, even though I know you're strictly technical, but what's happening in Europe now, Brexit, we had Brexit, it finally came to pass. What's your take on it as far as continuing influence from it?
Yeah, well, so first of all, I'd like to say congratulations to everybody in the UK. That's the smartest thing they could ever do.
Oh, yeah.
Is to break away from that disaster. And, I think the UK will be better for it in the long run. So that's first and foremost. But Europe is an absolute mess. It's a disaster. It was a disaster when it started with this whole currency experiment. It's really a science project that went sour a long, long time ago, and nobody wants to fix it or just say, hey, we messed up. So, and they're not going to say they messed up. They're just going to continue to do what they're doing. Negative rates have distorted the market, and you have negative rates in Europe. You also have them in Japan, and that's why we're seeing the things that we're seeing. So again, if you haven't, if you own euro and you're wealthy, you want to get out of that and own dollars. Like what do we call the dollar? I think we called it
the Taj Mahal of Baltimore.
Yeah. It's not that the dollar is so great. It's just that these other currencies are just so much worse, and we're going to see that continue. And Europe, I just don't see a way out for it. I used to live in Europe. I lived in Holland.
Oh, I didn't know.
I have friends there, and believe me when I tell you, they wish they could flee.
Yeah.
So it just that really should say it all. There's big problems there, and I have friends in Belgium, and there's these people getting taxed to the gills, and that's another giant error that is mistake that is taking place.
That's interesting. Yeah, my son's actually moving to Amsterdam shortly, but short-term job prospects, etc. So, but yeah, you can just kind of feel the air come out of the euro, and then the EU is in a trade war with the United States now. Let's not forget that, right?
FSN Radio. It's all about what's next.
Osino Resources is a Ross Beatty-backed gold exploration company in mining-friendly Namibia. Osino's district-scale land package is situated near 2 producing gold mines, one of which Osino's management team previously developed and sold to B2 Gold. Osino's founders and management are experienced mining professionals who have already successfully developed and sold 2 companies in the past 7 years. Osino has an excellent shareholder base with Ross Beatty owning 20%, insiders 5%, and Resource Capital Funds 8%. This is an exploration company with drills turning that you'll definitely want to pay attention to. Osino trades in New York under the ticker OSIIF and in Toronto under the ticker OSI. To learn more, go to osinoresources.com. That's osinoresources.com.
The Financial Survival Network. It's all about what's next.
Well, they've kind of pushed it to the side. It's in an election year, so I know he's not really pushing them too hard on it right now. But when he does, that's going to be an even bigger issue for them to handle, because right now Trump has all the cards. Europe really, in my opinion, has none. And, they just love to tax. That's the problem over there, and it's going to be a bigger problem. So there's really, I don't see a solution for Europe at all.
I'm inclined to agree with you there. Hey, and I guess so. Dollar continues higher then, huh?
Yeah, I don't see why it wouldn't. I mean, when we talked about it at the start of the new year, I mean, honestly, we talked about it in the start of 2018, right? So if you just go look at a chart, the dollar bottom there, and it's been going higher against the euro ever since, and that should continue. I don't see why that's going to change. Now, there will be counter trend bounces. It's not going to go down in a straight line. If you take a look at the euro chart, you'll see that it bounced a little bit up, at the end of January until January 28th to the 31st of January. So it doesn't go down in a straight line, but the trajectory is down. The trend is down, and that's going to continue.
Yeah. Yeah, the trajectory, the trend is there. There's kind of no getting away from it. And everybody had written the dollar off. I have one guest on the show, a guy named Bob Hoy, economic historian. And what he said is, and I started interviewing him in 2011, he said, in a credit bust, which we've gone through, you will see the reserve currency pick up purchasing power and gain strength because of the safe haven buying, things like that, and there is no real choice because all the other currencies become suspect.
Yeah, that's true, and that's kind of what we're seeing now. But you got to remember too, the U.S. has a lot of positive headwinds. We have low taxation here now, which we didn't have. Now we do. You also have an economy that's doing pretty good. You have low unemployment. There's so many positives here that are in the United States, where Europe is just the absolute opposite.
Yeah, Europe has just been heading down for a long time, and nobody, that's why you've got the rise of this nationalism going on here all over the world, but especially in Europe. You saw it in the UK. You're seeing it in France. You're seeing it in the Eastern European countries who are late to joining the EU. They're all looking for an exit door here.
Yeah, absolutely. And there's really only one door. It's the dollar.
Yeah, door number one, door number two, or door number three, let's make a deal. But it's the same prize behind all three doors, and that's the U.S. dollar.
That's right.
Amazing. And all of I was wrong too. I thought the dollar was really heading for the dustbin of history. But when I had talked with Bob Hoy 8 years ago, and this is what his studies revealed, you had it in the Byzantine Empire, in the Roman Empire, before the currency finally collapsed. Everybody was putting their money into it. They're using it as the reserve currency because they had no choice. And we're probably in a similar situation. So what makes the dollar go down again?
Well, I'm not seeing the dollar go down at the moment. But the dollar ultimately will go down, and what really will take place is our the debt that is going on around the world.
Right.
I mean, the debt we're at $23 trillion, I believe now. It's going to get to a point of no return, and we might already be there. To be honest, we might already be there, but it takes. It could take another 10, 15 years before we realize that. But yeah, it'll definitely be debt. And then once debt becomes so high, you'll have to have global forgiveness between all the different countries, and then we do a global reset. I think that's the only way to go about it. But we'll worry about that when it comes. That's still, in my opinion, at least another 10, 15 years away.
Yeah, and all of the turmoil going on around the world is only bolstering the dollar as the go-to currency. You're not putting your money in yuan or renminbis, right? Because who knows about them, especially with the virus, right?
Yeah, you're not going to buy Thai baht. I mean, you're not going to buy yen. Where are you going to put it? I mean, there's only one place to go, like you said. All three doors on let's make a deal. It's just a dollar behind it. That's it. It's the only choice you really have at the moment. And in all fairness, the United States, to give the U.S. credit, has done all the right things. I know President Trump does not want a strong dollar, but by default, he's going to get a strong dollar.
Yeah, regardless of what he does, and debasing it, it's only going to work. It's only can go so far. You really, the structural damage you have to do to really make the dollar come down at this point would be earth-shattering, literally. And to be honest, we don't want that. The United States does not ever want the environment. I think the Federal Reserve hopefully realizes that. We don't need that. We don't want to be in that situation. And I know the president tweets out about that, but you don't want that. You just take a look at the European Union, take a look at Japan. These places are a mess when it comes to monetary policy. Yeah, the U.S. It always comes back to the U.S. whether we want it to or not. In many ways, getting rid of the dollar as the reserve currency would have negatives for the country, no doubt. But in the long run, it probably is necessary. But it ain't happening yet. That's for sure.
No. I mean, one day all good things come to an end one day. That's just the way of life. But at the moment, at least for the next few years, from what I could see, the dollar should remain fairly strong, if not fairly stable. But I think we'll even see more upside and we'll see more downside in the euro.
Okay, so cryptocurrencies, Bitcoin made a little bit of a bump, came back, but it looks to me like it's going to be headed back down. It's at 10,000 right now. If it doesn't break that 11,000 and change that it hit a couple of months back, probably headed back down.
Right now, there's a lot of, the Bitcoin move is very, very what we call a hyper move. So when it goes really big. When it comes down, it comes down. Right now, you're at a very, very good inflection point here as far as resistance goes, and it's had that big run. So it's going to need to take a breather. If it does that, there's possibly more upside here When I did the math behind it, though, I don't think it goes much past the 11,500, possibly 12,000 marker. That would mark probably a pretty decent high for me. But when I'm looking at it, the chart has gotten strong, and you got to respect strong charts.
Yeah. The charts don't lie, right? I mean, if you're not following the chart, then you're following your heart, and that's a prescription
That's right.
for
well,
disaster.
Think about what a chart is. Chart is money flow. Money flow is what moves equities up. It's what moves equities down. That's how I like to look at it. People could give me all these fundamental reasons, but the bottom line is money pushing it up or money pushing it down? Simply, you're just following the money, and that always seems to reveal the truth.
Yeah, I couldn't agree with you more. Well, thanks for the overview. I thought it was necessary from where we left off because so many things have happened. And hey, not to mention this crazy election. What's your studies cycle-wise as far as election impact on markets and the economy?
Well, if the economy is strong going into the election, the incumbent wins on a landslide. If the economy falters and it's weak, then it becomes a much, much closer event. So it really is going to come down to how does the market behave going into November. I happen to think this year, because it's a 0 year of a decade, we're going to have some turbulence. I'm never good at predicting the catalyst of what it's going to be. Is it going to be a black swan? Is it going to be something out of Europe? I have to think it could be all of the above. You never know. Ultimately, though, when you look at the market, as long as the markets do not collapse and you have a pretty good market like you have right now, it should be Trump's to lose.
Yeah, I'm inclined to agree, and also you have to judge your competition too, which there really ain't much out there, to say the least.
Well, who's run right now? It looks like Bernie Sanders, but you know how these things work out. They've done everything to kick him out, basically, but he's still hanging in there. And then you never know, who else. Maybe Hillary pops back in the picture before you know it. It's going to be a wild one this year. And we're just going to have to review it as it happens.
Yeah. Well, the future's always uncertain, but my bet's on a brokered convention. I'm thinking Bloomberg because he could just pay everybody. The guy is it's his last hurrah. He's worth 50 to 70 billion, so he could pay every delegate at the Democratic convention, or all the ones that he needs, 10 million each. Still have a few billion left over, or tens of billions for the election. I mean, he's a loser, but he's got more money than time.
You bring up a great point. He's loaded, and we'll have to wait and see if he is the guy that gets all those delegates. I'm not really so sure that yet. I've been working on this one a little bit, but it's pretty neat to see how this all plays out. And we'll just take it in stride as it goes. But this is going to be an interesting one.
Yeah, well, in the end, money talks, follow the money. He's already bribed the Democratic Party with $350,000, and there's lots more where that came from. It's kind of like when the high roller pulls up in Vegas and everyone knows he's a whale and he just throws money out. There was a guy, Kerry Packer. He would give a cocktail waitress $100,000 tip. And
wow.
And this is the analogy here, because Bloomberg is just dripping the money. The money's just flying. He's
loaded beyond belief, but again, a lot of the Democrats they kind of shun billionaires, right? So look at Tom Steyer, look at a couple of others out there that tried to make a run. They just they didn't get any exposure. Then you talk about people like the Bernie Sanders crowd. They really despise billionaires. They despise anybody that's really went out and created anything. So, it's going to be quite something because we have such a divided country.
Yeah. No, I totally.
I'm really sitting back with the popcorn on this one. I'm going to just take it all in.
Yeah, you just can't make this stuff up, Nick. You can't make it up.
It's almost like nothing we've ever seen before. So, it just amazes me, though, that people don't want to look at Cuba. They don't want to look at Venezuela or multiple other European nations. It's kind of crazy to think that, capitalism isn't perfect. It has its faults. And sometimes you get crony capitalism. but it's by far a much more superior system than socialism or communism, which is what these guys are really pushing for.
It's really shocking that anybody could examine it. I watched this guy on YouTube, Jimmy Dore, comedian, intelligent guy. He gets the corruption, all that. And yet he thinks that Bernie can make all this socialist stuff work. Bernie has never done anything in his life. He's never run a business. He's never done a thing. And somehow this guy is going to be the miracle worker that we're all looking for. It's
people just don't really look back at recent history and just go look at Hugo Chavez. I mean, it's that was going to be the savior of last.
Yeah.
I know many living in Florida. I know many people that have relatives in Venezuela. It's unbelievable what is going on, and I just think people need to just go look at what's going on. Just go look at it, see it for yourself, and then determine if that's a system that you want.
Yeah, it's just not sustainable when the price mechanism, like in any market, when the price mechanism is not allowed to work and serve its allocative functions and its educational functions, then the whole system eventually will break down. And I don't know if I knew you back then when Hugo Chavez took over, but my prediction was it's going to collapse. There's not even a question. It has to collapse. And anyone who's ever been to Cuba, which I have twice, you know how this stuff works. I mean, you just see it. The whole place is falling down. Nothing in that country works properly. Nothing.
Yeah, nothing. And that's what people are gravitating to. That's what they're looking for, that are, part of this Bernie Sanders movement. It's sad. It really is sad. And even the more discouraging part is the amount of college students that are behind this movement. It's frightening.
Yeah, no, I could not agree.
We'll see how it plays out, but it's terrifying.
Yeah, well, hopefully these kids will come to their senses. At the same time, where the move for socialism's on, at least from the economic employment point of view, really the economy is good. Anyone who wants a job can get one. Now, standard of living and all that, I don't know. The latest surveys from Gallup show that people are apparently happy with their lives at this point, higher than they've been in a long time since. So got to wonder. Anyway, make sure you check out Nick's site, inthemoneystocks.com. We got a link to it in the show notes to this interview. Questions or comments for Nick, myself, what are your opinions on this? Simply email us, KL@KerryLutz.com, Twitter feed @KerryLutz, Facebook pages, Financial Survival Network. Our website's financialsurvivalnetwork.com. Nick, we'll talk to you next month. Be well.
Be well, Kerry. Thank you.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.